So, hello, FinTech builders and leaders. That is Guts, Grit, and the FinTech. This is the show for strong-minded entrepreneurs who are not afraid to transform the financial industry, who are not afraid to take the risk, to get the reward, and to build the brighter financial future. And I'm Vasyl Solashuk from INSART, FinTech Business Accelerator. And our today's guest is Tekippe from ZimpleMoney. Hello, Ted.
Hi, Vasyl. Nice to be with you.
Yeah, and thank you for joining us today. So Ted is a co-founder and CEO. And Ted, can you tell us a little bit more? What's your background before ZimpleMoney?
Sure. Well, I've spent my whole career in financial services, which is getting to be kind of a long time, 25 years or so. I got interested in the intersection of financial services and technology when I was in business school at Berkeley, getting my MBA. Kind of heart of Silicon Valley, a strong focus on entrepreneurship. So I knew that I always wanted to do something entrepreneurial. And then I eventually, found my way into payments and FinTech. Where I've spent the last 16 years starting, running, investing, advising different early stage companies, largely in the payment and lending space.
So why ZimpleMoney?
Well, private party lending and financing, loans from businesses and individuals rather than from banks, that's existed for thousands of years. But most of that is still done manually. People manage this on spreadsheets, run around collecting checks or requesting people send them money through their online banking. There are some very expensive solutions out there, or people pay a lot for third-party servicing. But we saw an opportunity to use technology to make it really easy and affordable to set up and manage loans and other types of financing in an automated and transparent way. And in the process, we had the opportunity to really help small businesses, investors, and individuals save a lot of time, money, and headaches.
So speaking about the target audience, so who will be your ideal customer profile?
Well, we really serve three different main categories of clients. The first are small businesses that are lending money or providing financing to their customers to help drive sales and need to manage recurring payments, whether that's a loan, a lease, or a subscription. The second category are investors in seller notes on business sales, property sales, or real estate investments. And the third are family offices and private credit lending.
Mm-hmm. So you're serving three different type of clients. What are the major differences between all of them, and what are the similarities?
There's lots of differences. Some is in terms of portfolio size, like some just have a few loans, some have large portfolios of thousands of loans. The different types of loans or financing that they need to manage varies somewhat. For example, a loan on a commercial real estate project is structured very differently than a loan on a traditional mortgage. And then, some of the capabilities that they need, whether that's aggregating different data into one platform or managing payment notifications, that can vary a little bit amongst those customer segments. But it's all really related to loan management and financing management and making that easy in a platform that they can access easily, but has a lot of robust capabilities.
So the solution that you provide to them, is it the same solution for everyone, or is it a customizable solution?
It's both. So the bones of it are the same for everybody, but we do have different tiers of capabilities, kind of depending on what exactly our client needs.
Okay, so speaking about the go-to-market strategy, so are you selling directly to customers, or do you have any type of partners, any type of channel partners?
We really focus on a channel partner strategy for go-to-market. So we partner with community banks, credit unions, professional services organizations, investment management platforms, and industry trade associations to market to our end users. We do some direct sales in very specific target verticals, but in general, we put most of our energy into a channel partner strategy.
So, and what's the benefit for being your channel partner?
There's a lot of benefits. First, just helping them serve their clients with a tool that helps them save time, money, and makes their lives easier and really kind of strengthens that customer relationship. Second, for depository institutions, that's banks or credit unions, we can help them attract and retain deposits. If we're tying into a business's revenue cycle management, for example, helping them ensure they collect payments in a timely way and account for that, and that's integrated into their banking platform, that makes that relationship very sticky. We can also help them attract new deposits as those lenders are inviting borrowers to a platform. We can help promote their depository services.
So going forward, are you going to stick to the channel partnership program as a go-to-market, or you would start selling directly to customers as well?
We do a little bit of both today, and we probably will continue to do both.
Okay, so like a mixed approach. Okay, got it. So speaking about the stage of the company, so what can you tell us about that?
We're an early stage fintech company. We raised a priced round last year that was relatively small, have a convertible note open now. We have about 10 people involved on the team today, half of which are full-time. We've got a great team, pulled together, both between full-time employees, board members, and advisors. Andy Dale from Montlake Capital is on our board. That's a PE and VC firm up in the Seattle area. Steve Rabago is a co-founder, longtime commercial banker, successful entrepreneur. He's also on the board. We have two great board advisors. Juan Pujadas was vice chairman at PricewaterhouseCoopers and was also on the board at Wells Fargo. And Jeffrey Toey, longtime friend of mine, repeat successful founder of technology and payment companies, is a board advisor as well. Allison Murray helps run our channel partnerships and growth efforts. And then we've got a lot of folks, in BD operations and our engineering team that help support the growth and evolution of the platform.
Okay, so I see that you have a really great board team. So how did you come to get together, all of you?
Lots of it is personal connections that I've had over the years. I can't believe I forgot to mention Oli Eichhorn, who leads our engineering team. Oli is a longtime tech veteran. He was one of the earliest engineers at PayPal way back when that was a startup company as well.
Okay.
He was CTO at my last startup, DoubleBeam, and I worked with him on a number of different projects. Jeff Toey, worked for me for a while at DoubleBeam, and he and I have again worked on different projects. So have known each other for over a decade. Same thing with Steve Rabago. I met him, a dozen years or so ago now. So it's either personal connections of mine or kind of second degree connections of theirs for the most part.
Yeah, that's great. Because you can know what is the problem, you can know who are your clients, but you definitely need a very mature team, strong team to execute the whole strategy. Okay, so it's also very important, for the investors. Am I right that you're actually raising right now?
We are, yeah. So as I mentioned, we raised a small seed round last year. We have a $2 million convertible note open right now, with about a quarter of that already subscribed or funded. But we're actively raising on that, and then we think we'll probably do another priced round middle of next year.
Okay. So, and it's important for investors actually to know how the competition looks like. So, can you elaborate on that? So, do you have any specific competitors, like direct competitors, or you have some sweet spot where you don't have competitors? So, what's your point on that?
Sure. Well, believe it or not, our biggest competitor is Microsoft Excel. Most people that are managing private lending and private financing today are grinding it out, trying to do it on a spreadsheet, trying to manage complex formulas and hope they don't screw it up. We do have some other competitors in the space. There are some enterprise level loan management platforms like the Mortgage Office or Loan Pro that are really targeting mortgage banking operations. So they're much more expensive solutions, very very robust, have a lot of capabilities, but are outside of the level of investors for most of the market, and certainly outside most small businesses that are trying to manage customer financing. And then there are some people that are managing notes on real estate transactions that use third-party servicing companies. They're not really technology solutions, and they're traditionally more expensive than what we charge, and don't have the same level of sort of technical capability and transparency that our platform has for all the different parties involved.
So actually competing with the Microsoft spreadsheets, this is the very common use case that we see on the market. So when the spreadsheets, they're used for multiple different things to run the finance, accounting, but if you can replace them, and you can have like more efficient operations. So this is a really big market.
Sure.
Okay.
I mean, look at Carta, for example, right? Today, everybody
Yes.
manages their cap table in Carta. But 10 years ago, when I founded my last startup, everybody did it in Excel. And sometimes they were paying attorneys to do it in Excel. It was very complicated. It wasn't transparent. People made mistakes all the time. You had to deal with everybody on your cap table asking you questions, all these different vesting schedules. And Carta just made that super simple and easy and came up with a much better solution. I think that's a good analogy for what we're doing.
Yeah, it's a great example. Okay, cool. So you're saying you are raising right now. Can you tell us why actually you need to raise? Why not to grow organically? So what is your growth strategy here?
I think it's a couple things. First, we're investing in our go-to-market strategy. So, developing channel partnerships, while they have massive scale, it takes time and energy and effort to do. Second is on the engineering and technology front. We have a great platform today. It's web-based. Anybody can access it from their internet browser. But we're actively working on building out a set of public-facing APIs, so that we can integrate with other CRM platforms where some of our clients are, keeping track of their customers today. Integrate with vertical software companies that want to have embedded lending as part of their platform, and integrate with online banking and digital banking platforms. So that's a pretty big engineering lift, and something that I mentioned we're already underway with, but actively working on. Second, we're going to start aggregating data across different servicing platforms. We have some larger clients that manage different portfolios, in different places. Sometimes because they're acquiring portfolios that are managed at a third-party servicing company, and we want to pull all of that data into one platform so they can have one dashboard, one source of truth. See everything that's happening in one place without having to download reports from different data sources and then try to integrate them into some BI tool. Along with that, we also want to start using AI to develop data insights and analytics, and do things like risk rating and other types of interesting reporting. And I think once we sort of pull all that data in, AI is really going to help power our solution kind of to the next level beyond that.
Yeah, that's great. I see that the integration strategy is one of the most common for the fintech startups at this stage, and it looks like you have a very strong and mature strategy with whom you want to integrate. Yeah, and everybody is speaking also about AI. So you sit on the tons of data. So certainly, so you can also leverage this into some insights to your clients. So speaking about the next big move, what would it be? Maybe next 6 to 12 months?
I think the things I just mentioned, building out those APIs, aggregating data from different sources, leveraging AI for analytics, but then also the one thing I didn't mention that I think is really going to help power our platform too is connecting to different sources of capital, be that a secondary marketplace to sell loans and recoup capital, be that to indirect lenders, and or warehouse lending providers, so different banks that want to provide warehouse lines to businesses, so that they can lend to their customers. Those are kind of really the objectives for 2025. That's a pretty big bite. I don't know if we'll get all of that done in 2025, but maybe give me 18 months.
Do you have any specific number of milestone for the next milestone to achieve? I don't know, like in terms of revenue or number of clients.
Sure. Yeah. So we're coming up on 20K in MRR right now. We want to grow that by a significant multiple in 2025. Similarly, we want to grow a significant multiple in terms of our number of loans that are on our platform. That's really our key metric.
All right. Okay. So Ted, thank you very much for being with us today. So it's a really exciting story. And we'll keep an eye on how it's going in 2025. So thank you for being with us today.
Thank you so much, Vasyl. I really appreciate the opportunity, and it's always nice to be with you.
Yeah, of course, of course. And for everybody who are watching us today, please like this video, share it, and tell us what do you think about ZimpleMoney platform and about loans, and share your experience with us as well. And thank you for being with us today, and let's keep building the brighter financial future together. It was me, Vasyl Solashchuk from INSART, and Ted Tekippe from ZimpleMoney. Thank you, and bye-bye.
Thanks. Bye-bye.